to begin with, asking about this correction. I mean, what do you attribute this recent meltdown to? I mean, is it the lower voter count that is giving investors jitters ahead of the results on June 4th? Because, I mean, if you look at it, the global cues, they have been nothing but healthy in the last 3-4 sessions. Your take, sir?
You know, you're correct. I mean, the global factors should have played in our favor. I think what you've said is well, there's two things behind, I think, the recent kind of fall in the market. One is, as you said, because of the low turnout, there's a lot more speculation than probably there would have been if it would have been a higher turnout, that's for sure. So, a little bit of jitters around that. And secondly, last time we spoke, I said that the two factors which would help the markets would be the earnings of IT and banking. Now, IT, failed to kind of give us any great hope in terms of the commentary. And of course, with interest rates being kind of delayed in the US, there's no kind of tailwind for the IT companies in India. The banking sector, however, did very, very well, and the NIMS kind of compression that we've been seeing and the pressure seems to be behind most of the banks, and that's why you saw the banking sector move very, very nicely. But then again, the RBI came up with some regulations, regarding construction and provisioning, and that's just again dampened the whole sector. In terms of that's one which could have led the market, given its 30% plus weightage in the nifty, but that dampened it. So overall, those factors I think have just played on the market's mind in the last few weeks.
All right, and I mean, it looks like investors are factoring in a lot of uncertainty going ahead as well, because India VIX, the volatility index, the fear gauge, has spiked from 10 odd levels to about 17.5 now. I mean, election jitters aside, I think the times that we are living in, Andrew, there is a high probability of a black swan sort of an event happening, with tensions in West Asia, Ukraine, Russia war, elections here in India as well as in the US. I mean, are you factoring that possibility of a big market meltdown as well? And more importantly, what's the likelihood of this big black swan event sort of a situation happening?
Well, you can never be too sure. I mean, in terms of black swan events, that's why they call black swan events. You're not quite sure what it's going to be. But with the known factors out there, I think the market's kind of feeling confident that, the kind of Israel-Gaza thing is getting closer to some kind of truce there. Russia-Ukraine continues, and it's not a market-moving event at the moment. Unless that there was a complete collapse in Ukraine of their defenses. So those are the things that the market will keep to watch on. But you're not seeing any movement in oil prices to give you that kind of fear that there's something there. I suppose the one unintended consequences could be if the higher rates for longer in the US, would that have any impact on the commercial real estate at some point? As we've seen in the banking sector there, the regional banks had some real problems. So the longer the rates are higher, the more you can have the possibility unintended consequences. But the market's not worried about it at the moment. So, it's hard to kind of measure the fact. The one thing I would say is that, the market after the elections will focus very quickly on the budget. And of course, there's more and more rumors swirling around about capital gains tax being increased, increase in tax for, say, arbitrage funds, and so forth. So that might be something that the market will get a bit more jittery about after the elections.
Andrew, good morning. We talk about the higher for longer sentiment setting in, but there is another thing that has happened in the last few months, and that is the yen sliding to an all-time low. Dollar has strengthened and the long positions have risen to all-time highs in Japan. Indian rupee along with the peso, the carry trades are most affected by the movements in the yen. Do you see that as a problem when it comes to carry trades and the export volumes and with respect to the Indian rupee?
Not to that extent at the moment. I mean, if you're a Japanese investor, it's been a great year or so, right? You've had depreciation of the currency and markets move higher for you, so it's been a great trade. But the Japanese central bank there is not really rushing to kind of increase interest rates. despite the fact that, the currency is depreciating. So I see them, they did take some action last week, as we saw, and spent quite a lot of money doing so. So I think they'll play at the edge. I don't think they're going to really kind of see a big appreciation in the currency. I don't think they want that either. So I think I think that the rupee, if anything, will probably strengthen from here, given our inflows for the bond funds coming ahead, and the fact that the economy is doing very well. So I'm a little less worried on the kind of rupee at this point.
All right, and Andrew, speaking of the fourth quarter earnings season, I mean, you spoke about IT and banks. A lot of the sentiment was pivoting on that, and at least for now, it looks like there are no tailwinds for the IT sector. The banking sector, I mean, the pressure was supposed to be there as far as NIMS is concerned, the net interest margin, but that wasn't as as much as the market was anticipating. But that aside, it seems that at least in this time around, the street is focusing on the guidance a lot more, and at least if there is a big turnaround plan in the offing, and I'm talking about Tech Mahindra here, I mean, the results were like really bad, but the commentary, at least from the new CEO, was that we are focusing on a turnaround plan over here. So the street was really happy with that, and on the back of it, we saw a rally in Tech Mahindra. On the other side, Bajaj Finance, the numbers were decent, but the commentary was not anything that would inspire confidence. I mean, do you think that first, what's your assessment of the fourth quarter earnings season, and second, do you think that the market, the sentiment is focusing on what's going to happen tomorrow than what the companies they have to show for now?
Yeah, so the results season has been quite interesting. I mean, excluding IT and banks, as I've just mentioned that, by and large, I think earnings are around 12% to 13% higher, which is in our range of 10 to 15% earnings growth for the year. So no big surprises on the upside. If anything, you see more downgrades to earnings by analysts over the past few weeks. And of course, anything that misses the target, because ratings and valuations are where they are, you're seeing a big fall in the share prices. So that's where we are. I don't think that the only surprise factor has been the FMCG companies, and maybe because they have been so unloved, no one expected anything to happen in terms of volumes or margins. It's been a nice positive surprise. So if you're thinking, going back to our previous chat about kind of volatility in the markets, if you want to hide somewhere, maybe FMCG is the place to hide rather than IT at the moment, because at least you're getting growth. And of course, the market's now thinking that rural economy is going to start picking up, and that will aid to the FMCG earnings going forward. My take is slightly different. I don't see those kind of rural numbers picking up so swiftly, and I still stick to the theme of premiumization, which works within the beverage industry in particular.
We are reading some expectations that the monsoon is going to be better this time around. But as you also pointed out, we are not seeing any green shoots of recovery as far as the rural demand is concerned. But a broader play, I feel, is that this consumption theory. Do you think consumption, the consumption space particularly, do you think that could be a theme that, investors could play for the next few quarters, sir?
I think it's a theme that you have to play over just many quarters, to be honest. The way I'm thinking about the whole, let's just take after the elections. I mean, obviously, we know three things are going to happen. The government's going to spend on defense, renewable energy, and railways, and infrastructure overall. So that's the good news, right? So those themes don't go away. I'd play the infrastructure slightly different. I'd play it more through this, kind of the smart manufacturing, smart cities. So the kind of lends itself to the ABB, Siemens of this world, which are more geared towards that than just pure construction. And then the theme that in terms of consumption is premiumization. As you get, $2,500 per capita GDP, people move up the curve, and we're seeing that already. And you have a young population who are willing to kind of try new and different things. And I think that runway is a very long runway. So beverages, if I'm playing consumption, I'm playing beverages, because I think there's going to be a lot more growth going forward, better margins, and higher profitability.
All right, Andrew's betting on beverages in this consumption theme. Sir, but before we let you go, the markets have come quite significantly off their recent record high. We are down about 550 points. At a time like this, you know, when the markets are feeling the heat, the investors are jittery, especially ahead of the results on June 4th. What would be your advice to retail investors? What should be the strategy that they should follow, you know, after elections, especially moving into the budget season as well?
So listen, we know that there's certain sectors, I mentioned a few of them, which we know the growth is going to continue to be there. Electronic manufacturing sector is another sector. You know, these are themes that are not going to go away very quickly. So those are the companies you should add. If you're looking at investing at the moment and you feel that, you know, the market's a little bit too volatile, wait. I mean, you know, there's no harm in waiting a few more weeks for the election results to come through, and then deploying, you know, in terms of the manifesto, in terms of what is the government going to be doing, where they're going to be spending money. You could just go with a little bit more clarity if you wanted that comfort level.